morning. You're watching All You Need to Know on BloombergQuint Live, and I'm Alex Matthew. First, the headlines. Asian markets are off to a weak start after disappointing macro data from across the globe further fueled global worries about growth. Markets in China and Hong Kong remain shut today as well. Yes Bank says that Tuesday's steep fall in share prices was due to an invocation of shares pledged by Rana Kapoor's Morgan Credits. Kapoor's stake now stands at below 1%. GST collections for the month of August fell to a 19-month low. The figure for August stood at 91,916 crore rupees. Mahindra will invest 650 crore rupees in a joint venture with Ford to develop, market and distribute vehicles across India and other emerging markets. M&M will own 51% stake in the venture. And the Ministry of Corporate Affairs is inspecting the books and accounts of a real estate firm HDIL after loans given to the company led to the collapse of Punjab and Maharashtra Cooperative Bank. Let's talk about US markets now. They've tumbled to the lowest levels since August as disappointing manufacturing and private payrolls data spurred fears that the American economy is slowing. Treasuries climbed with gold and the yen on a demand for safe haven assets. Ranita Young of Bloomberg News reports.
U.S. markets closed lower on Wednesday after U.S. private companies' payrolls sunk to lower than expected. More disappointing data fueled more concerns about the world's largest economy. And the World Trade Organization gave President Donald Trump the go-ahead to impose tariffs on as much as $7.5 billion worth of European exports. Now, during the session, we saw car makers sink after mixed quarterly results from both Ford and General Motors added concern to thinning profit margins within the automobile industry. Ford sunk to around its lowest since March, and GM also fell to its lowest since around June. And this is after Morgan Stanley cut its profit estimate on the worker strike that happened within General Motors, saying that it has materially impacted the third quarter and may possibly do the same for the fourth quarter. Meanwhile, treasuries rose along with gold and other safe havens as more fear was injected into the market. And on Thursday, there will be ISM's non-manufacturing data, and Friday will come the September jobs report. And that's a look at your Wall Street action on Wednesday. In New York, I'm Ranita Young for Bloomberg News.
All right, so the cues aren't the best. In fact, another indicator is that the bearish sentiments in the oil markets continue with prices falling for the 8th straight day. The U.S. administration said that inventories rose 3.1 million barrels last week, which was significantly higher than estimates. Aaron Clark of Bloomberg News tells us whether the sentiment is likely to continue in this vein.
There's a lot of bearish sentiment in the oil markets right now. West Texas Intermediate, the U.S. benchmark, is trading right around $52, $53 a barrel. Brent, the global benchmark, is right around $58 a barrel. These are the lowest prices since early August. And I think what's driving this is really just a surplus in inventories. The U.S. government said yesterday that U.S. inventories rose by 3.1 million barrels. That's much higher, much more than analysts were expecting. Total inventories on a seasonal basis are above the 5-year average. So I think that's really the primary factor that's driving prices lower right now. You know, it's really a significant turnaround from where we were a few weeks ago after the attacks on Saudi Arabia's oil installations. But I think what happened is they repaired those facilities much faster than people anticipated, and they brought the supply back, and we're basically where we were a few months ago. The sentiment in the market in global crude markets is very bearish because of the supply overhang.
So we're now hearing that OPEC's Middle East output has now fallen to the lowest level since January of 2017. So how much will this help in supporting prices, or is it just about all of the other supplies, especially in the U.S. now?
I think it's being driven in part by U.S. supplies. I think there's also a lot of concern about, underlying global economic growth. You had these numbers from the U.S. Yesterday. U.S. payrolls in September rose less than expected, and August gain was revised lower, suggesting a possible recession in the U.S. manufacturing sector. Of course, you've got the U.S.-China trade war overshadowing everything. So I think there's a lot of concerns about global economic growth, weakness, macro macro weakness that's feeding into concerns in the oil market. Of course, if you have a global economic slowdown, that reduces oil demand. So I think those two factors, along with the supply overhang, is really driving sentiment and driving oil prices lower right now.
All right, so you heard when we were talking about the U.S. markets, this is the first time that the S&P 500 has fallen consecutively over 1%. That's on Tuesday and on Wednesday. So the data coming in is not looking good in terms of global economic growth. And that sentiment, really, that sour sentiment in the equity market seems to have bled over into Asia as well. So the two early risers, two of the three were trading. The Kospi in South Korea is not trading, but you see across the board, you see sharp cuts in the red. Just earlier, about 15 minutes back, we were talking about the Nikkei 225 in Japan, and you have the Australian benchmark, both with cuts of as much as 2% or more at the start of trade. You have the Hang Seng that's trading with cuts of about 0.6%, and that's only rising higher right now, about 0.75% of cuts. So we'll have to watch how that pans out. Remember, however, that the Chinese markets are shut, so the volume overall in the APAC region with regard to trade is going to be a little lower as of now. For now, let's turn to another big story that we're tracking. UK Prime Minister Boris Johnson has unveiled a new Brexit plan. And that plan has already drawn criticism from officials in the European Union, including the President of the European Commission. Let's first listen to what the Prime Minister had to say at the Conservative Party convention.
Let us be in no doubt conference of what the alternative is. The alternative is no deal. And that is not an outcome we want. It is not an outcome we seek at all. But let me tell you, my friends, it is an outcome for which we are ready.
All right, so he's ready for a no-deal Brexit, but let's see what Jody Schneider, Bloomberg News, lists out when she talks about the details of the new Brexit plan with less than a month to go for the deadline for the Brexit, that is the 31st of October.
Well, he signaled that he's much more ready to do a deal with the EU. His language has changed a little bit. He's still saying that he's prepared to leave without a deal if necessary, as we just heard. But he is saying now that he wants to have a deal, that he's going to try to get a deal through with the EU in coming weeks. His deal may have just enough concessions to the European Union to keep them at the table, and may be able to squeak through with just enough votes in Parliament. A lot will depend on what he's able to negotiate, obviously, with the EU. Again, he's still saying he's prepared to leave on October 31st, but he is signaling much more willingness to negotiate. And obviously, he's going to have to do that because there's a lot of skeptics in the EU, including the president's comments yesterday, the EU president's comments, that they're not sure that this contains enough for what they need for there to get through them. And then, of course, it will go through the Parliament. This will kick off a 2-week period of negotiations with the European Union.
Jeremy Corbyn saying that the proposal is worse than Theresa May's deal. So what are the chances in Parliament?
Yes, Jeremy Corbyn does not like this deal. He didn't like Theresa May's deal either. But how this is different and why it may be able to squeak through Parliament is it does not contain that contentious Irish backstop proposal that Theresa May's plan did, and her plan went down to defeat 3 times in the Parliament. This instead has basically, it separates Northern Ireland sort of into its own regime, and it would require customs checks, which neither Ireland nor the EU like, but it would not have land border checks. And there are some who say, including some Eurosceptics, some hardline Brexiteers, who say this may work better than that backstop. Now, of course, getting it through the EU is going to be the problem. They don't like this proposal, and they don't like those customs checks, and they worry about this whole setup. But they may be willing to negotiate on that, and Boris Johnson has signaled he may be willing to negotiate as well.
Well, and if European leaders didn't have enough on their plate, US President Donald Trump got the go-ahead from the World Trade Organization on Wednesday to impose tariffs on as much as $7.5 billion of European exports. This is in retaliation to alleged illegal government aid provided to Airbus. The award is the largest in the history of the WTO. Now, Sarah McGregor of Bloomberg News reports with more details.
Not surprisingly, aircraft are on the list of retaliatory targets that the U.S. is going to hit. It's going to hit a 10% tariff on large aircraft coming from a few European countries, including the U.K. and France. Also, though, are other items completely unrelated to aircraft. There's 25% tariffs on things like olives and cheese, some machinery, pork. So, it's a bit of a mixed bag in terms of what the U.S. is targeting. And what the ultimate goal is, according to the U.S. Trade Representative's office, is to hit Europe where it hurts in order to get them to the table for a negotiated settlement. There's another case coming up at the WTO next year where Europe alleges that the U.S. has unfairly subsidized Boeing. And so I think, the U.S. wants to head off perhaps any retaliatory tariffs the EU may put in place on American goods as a result of that similar case.
Sarah, President Trump seemed pretty satisfied with the ruling. Take a listen.
It was a big win for the United States, right?
It was.
You never had wins with other presidents, did you? But we're having a lot of wins at the WTO.
This was
since
a case that started, I think, 10 or 15 years ago.
Okay.
But
excuse me. Your wins are now because they think I don't like the WTO and they want to make sure I'm happy because all of those countries were ripping off the United States for many years.
Sarah, it was a big win, right? The award was the largest in WTO history.
Absolutely. The U.S. was looking for $11 billion, but I think it will be happy with the $7.5 billion award that it got from the WTO. As you just said, it's a record. That being said, I guess to clarify what President Trump was saying there is that, the WTO's main problem, I think, with, the world right now in terms of tariffs is that the Trump administration is putting these protectionist barriers up on its own using American laws, these national security tariffs on steel and aluminum, the Chinese tariffs, whereas in the WTO case is going through the WTO system, the global world trade system that everyone had set up and has agreed to. That being said, criticism of it is how long it takes. This recent Airbus case took 15 years. So I think, there's sort of criticism to be leveled on both sides of the debate.
Let's have a look at what else is making headlines across the globe. Sue Keenan of Bloomberg News brings you the first word headlines.
We start in Indonesia, where President Joko Widodo has told Bloomberg he will not take sides in the U.S.-China trade war. In an exclusive interview in his hometown of Solo, Jokowi said he will use his second term to introduce a wide range of reforms, including changes to labor laws to let Indonesia attract foreign investment. He also said trade tensions hurt all sides, and he must make sure Indonesia does not suffer from the fallout.
Indonesia wants to take opportunities so that the trade war doesn't negatively impact our country. We have good relations with the U.S., China. The most important thing is our national interest comes first.
To the UK now, Prime Minister Boris Johnson will suspend Parliament next week so he can lay out a new legislative program ahead of the Brexit deadline. The suspension will last 6 days, with MPs returning to Westminster on October 14th. Now, Johnson has also announced his new Brexit plan, telling the EU he will make no more offers. Brussels says there are problems with the plan, but Johnson is refusing to back down. To corporate news now, Airbus is warning that American jobs will be threatened if the Trump administration goes ahead with tariffs. The World Trade Organization authorized $7.5 billion in duties against the European Union at the end of a 15-year dispute about state aid. Airbus says about 40% of the components in its average planes comes from the U.S., supporting 275,000 jobs in 40 states. And the largest investor initiative tackling climate change says that after 2 years of talking to the world's most polluting companies, its data shows most have not met international targets that were agreed to back in 2016. The Climate Action 100 Plus group says only 9% of the companies are meeting requirements. It also says more pressure is needed to push corporations to cut their net emissions to zero by 2050. Global news 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Sue Keenan. This is Bloomberg.
All right, well, let's have a look at the Indian markets now. Agam Vakil is here to set you up for the day's trade and also to tell you what's happening in the futures and options space. Agam, a lot has happened. We were on a midweek holiday, but the American indices have sharply corrected over Tuesday and Wednesday, and we're going to be playing catch up to a certain extent. And that's something we have to bear in mind at the start of trade today.
Absolutely, spot on, Alex. And let's not forget, there's a whole bunch of news in terms of stocks revolving in Indian markets too. So we will have some sort of reaction there. Do remember the banking index specifically was very tough as far as Indian markets were concerned. For now, the SGX Nifty futures is declining. We saw a 1% cut for the Nifty 50, the mid-cap and small-cap indices coming up by as much as 2%. But it is the banking indices which stood out, specifically the PSU banking index in this case, which was down as much as nearly 4%. So there is weakness here. We are looking at declines in HDFC Bank and Vedanta to the tune of around 1.5% for now. And of course, in terms of those stocks which are advancing, not too much to speak for except for Wipro and Infosys. But we saw a much larger number from FIIs this time as far as selling is concerned. Do remember that we did speak about high turnovers in cash, and FIIs have sold to the tune of nearly 1,300 crores. Of course, DIIs, on the other hand, buying up to the tune of 1,500 crores. This may be a matter of concern considering volumes were very high. We did see a lot of weakness in Reliance Industries, ICICI Bank and State Bank of India bearing down on the indices as well. But what about futures and options? It's early days in October. It's a relatively longer series. For now, we have seen more accumulation in open interest towards shorts. And as far as the Nifty banking futures, the number is a lot higher at around 14% increase in OI, once again towards fresh selling. Now, this is your open interest distribution for the month. And as we can see, until maybe Monday or Tuesday, we were trying to guess what was the upper level. Was it 11,700? Was it 12,000? Now it seems that 11,500 is building itself as the upper end of the range, at least in the near term. This, of course, can change quite substantially. And 11,000 on the lower end, 11,000 put. And these are the two options where we've seen a little more writing come through, save for 11,800 call as well. But let's move on and talk about your VIX. And well, at one point in time, it was up as much as 10%, above the mark of 17. It has come off, eventually closing with gains of as much as 6%. The put-call ratio has moved back below the mark of 1. So we have that standing at around 0.96 versus 1.04. And stocks, we're going to keep an eye on a whole host of financial names. Yes Bank, IDFC First, Axis Bank, IndusInd Bank, all of them losing and with substantial increase in open interest towards fresh shorts. In terms of stocks which are seeing unwinding, PVR, BPCL and Mindtree. Of course, we're looking at some amount of short covering, specifically BPCL and Mindtree. But Alex, it's going to be about the financial sector and keeping an eye on Yes Bank and Indiabulls Housing Finance specifically.
All right, thanks so much for that, Agam. Now, after Punjab and Maharashtra Bank fiasco last month, the Ministry of Corporate Affairs is probing the books of Housing Development and Infrastructure Limited, or HDIL. The probe has been initiated after the RBI found that PMC Bank had a total exposure of 73% of assets to HDIL. Nikunj Ori reports.
The Ministry of Corporate Affairs is probing books of accounts of HDIL Limited after the loans given to the company led to the fallout of Punjab and Maharashtra Cooperative Bank. The Regional Office of Ministry of Corporate Affairs is examining regulatory filings, financial statements and related party transactions of HDIL Limited, and a report on the findings of the same will be submitted to MCA Secretary Mr. Injeti Srinivas in about 2 months. The probe has been initiated after the Reserve Bank of India found that PMC Bank had a total exposure of about 73% to HDIL Limited, and loans advanced to HDIL Limited helped the company in delaying insolvency proceedings against the company. On Monday, Economic Offences Wing of the Mumbai Police has also registered an FIR against officials of PMC Bank and HDIL Limited.
Now, you'll remember that banks have had to shift to a new floating rate regime for retail loans from the 1st of October. The rates are linked to external benchmarks, thereby changing the interest rate or in some cases. So, which banks have actually lowered the rates substantially? Vishwanath Nair has the answer.
After a push from the Finance Minister, Nirmala Sitharaman, the Reserve Bank of India last month had said that all banks must issue fresh retail and MSME loans starting October 1 with interest rates linked to an external benchmark. Now, banks had all sorts of options, but a majority of the banks who have actually announced these external benchmark linked products have chosen the repo rate as that external benchmark. Now that October 1 has come and passed, let's try and get a sense of where each bank stands. As far as our assessment of these banks goes, we have looked at what happens with the home loan segment, because that is primarily where most lenders and most borrowers feel the difference in interest rates. So to get a sense of where these banks stand, let's start with State Bank of India, the largest lender in the country. And according to what State Bank of India has already disclosed, for loans up to 30 lakh, the previous interest rate, which is linked to the MCLR, was priced at about 8.15% annually. But under the new effective rate, which is the external benchmarking rate, that rate has come up to about 8.2%. That's not much of a difference from the previous rate. It's only about 5 basis points, which actually makes no difference to the customers. But how did the SBI come to that rate? That is, it broke up its interest rate into 3 parts. First is the repo rate, which is the external benchmark, 5.4%. Over and above that, SBI added about a 265 basis point worth of spread, which is essentially calculating its operating costs as well as some of the other administrative costs that may be linked to a loan, as well as about a 15 basis point markup, which is linked to the credit risk involved in that loan. So depending on the customer's risk profile, that 15 basis points will change, will essentially come down for better rated customers. Now, let's look at some of the other large lenders in the system. Firstly, with respect to Bank of Baroda, the MCLR rate was about 8.4 to 8.5% for a loan up to 75 lakh. Now, that has reduced or somewhat compared to about 8.35 to 9.35%. Essentially, that 9.35% is coming in because Bank of Baroda has introduced a 100 basis points credit risk premium. So that will change, of course, depending on the credit score of the customer. Similarly, for Bank of India, the rate has gone down from 8.45 to 8.65 to 8.3 to 8.65. So that is a clear reduction of about 15 basis points on the lower end of the spectrum. However, that 8.65% still stays. Here again, they have introduced a credit risk premium of 25 to 40 basis points. That is a range that the bank has given depending on the customer's credit profile. Essentially, 25 basis point works for customers who have a credit score of 760 and above, and then it just keeps coming up depending on the credit score. Let's look at some of the other public sector banks in the system. Firstly, that's Union Bank of India. Here again, between 30 and 75 lakh, essentially loans below 30 lakh, the bank has said it will charge 11.4% fixed rate. But for loans above that value, they have introduced an external benchmark. There again, the effective lending rate has come down from 8.8% to 8.3%. So that's a 50 basis point reduction for Union Bank of India, the higher end of the spectrum. Similarly, for Canara Bank, now the Canara Bank, when it released its statement to the stock exchanges, it said that the interest rate will be calculated on the repo rate plus 290 basis point spread on how it calculates its interest rate. But it did not clarify whether it will be charging a credit risk premium over and above this rate. But just looking at that amount, that's about 8.3% compared with 8.4% that the bank was charging earlier. So there again, the rates have come down. Things will change, however, for private sector banks who have largely been silent in the entire game so far as external benchmark linked rates are concerned. Here, we're looking at two of the larger private banks in the system, Axis as well as ICICI. In both these cases, as you can see, the effective revised rate is pretty much similar to what the previous rates were. So that is primarily because the banks have introduced a large spread over and above the repo rate. So that's about 345 to 390 for Axis Bank and about 350 to 380 basis points for ICICI Bank. While these banks did not clarify, what portion of this spread is because of administrative costs and what is because of credit risk premium, it suffices to say that the effective lending rate has not changed much, and therefore the banks will be trying to retain that margin. Now remember, this is something that the analysts have been repeatedly pointing out, that as far as private sector banks are concerned, they'll be better at managing their margins than some of the public sector banks in the system. They don't mind sacrificing their margin as far as the lending activity and the borrowing activity in the system takes over again. The largest private sector bank in the system, HDFC Bank, has already clarified that large part of its book is actually fixed rate in nature, and therefore the RBI's new external benchmark linked rate will not apply to that bank. So that is where the entire lending system stands as far as external benchmarking is concerned.
All right, moving to the automotive space, Mahindra & Mahindra has entered into a joint venture agreement with Ford to develop, market and distribute vehicles across India and other emerging markets. Mahindra will hold a 51% stake in the joint venture. But here are some of the highlights of this deal.
We will have Mahindra own 51% and Ford own 49% of the new company. And I'll come to what the new company is. And they will continue to own 100% of FIPL, which will only have the Sanand powertrain business. Sanand powertrain primarily exports to Ford's other markets, and therefore it will have Sanand powertrain business and also continue to have GBS business. However, part of GBS that is serving the FIPL business will mostly move to FIPS, except for product development that will continue to reside in GBS for some time. The enterprise value of this deal is 1,925 crores. The way it's broken up is that there's a likely debt transfer that will happen from FIPL to the new company, joint venture company, of 636 crore. Leaving a likely equity value of 1,289 crores, out of which Mahindra contributes 51%, which is 657 crore, and Ford will contribute 49%, that is 632 crores.
Our combined strengths are going to result in the creation of a new company that is a scale player in India with a 14% combined market share. And let me repeat this too. A 14% combined market share. And my friends among analysts will be delighted to note that this venture is designed to be EBITDA positive from the very first year. In fact, we are obviously hopeful that it's going to be PAT positive as well.
We are currently in the process of deciding on building a new electric vehicle on Ford's Aspire platform. That again project is under approval right now, and once that is approved, that will be developed using Mahindra electric technology for electric powertrain and using Ford's platform of Aspire, and manufactured in the Ford plant and shared both by Mahindra and Ford.
All right, let's take you through some of the stocks that you have to watch out for on trade today. Samit Sarkar is joining me to tell you all about the stocks in news. Good morning, Samit. What's on your list today?
Good morning, Alex. I'll start off with Prestige Estates. Now, they have jointly invested with DB Realty Group to build a hotel and a convention center in Delhi's AeroCity. Now, they will invest close to 355 crore rupees for the 50% stake, and the total investment for the project will be close to 2,000 crore rupees, and the joint venture will develop a total area of close to 3.5 million square feet. Yes Bank would be the second stock because the bank has said that the fall in share price was triggered by a forced sale of 10 crore equity shares held by the promoters due to invocation of this pledge. Now, post this sale, the entire pledged holding in the company stands extinguished, and the bank also said that the bank's financial and operating metrics remains sound and stable with excess liquidity. Indiabulls Housing would also remain in focus because they have come with this clarification where they're saying that they have no outstanding loans to DLF, Reliance, Anil Ambani Group and the America Corp Group. Now, the loans given to Watia Group are secured against mortgage of land and property, and there have been some loans which have been extended to the Choria Group, and they are receiving regular repayments for this. The NBFC also said that they have never borrowed anything from the National Housing Bank. Indigo would also remain in focus because the promoter, Rahul Bhatia Promoter Group, has submitted a request for arbitration to London Court against the partner Rakesh Gangwal. Also, JSW Steel would remain in focus because Care Ratings has revised its outlook to negative from stable, and the revision was due to slowdown in the steel sector, which is likely to impact the profitability of JSW Steel for the ongoing year and for the next year. Furthermore, they are saying that considering the capital expenditure and the scheduled repayments for financial year 2020 and financial year 2021, the company may have to refinance part of its debt, which would keep the debt level elevated for the company. Hindustan Aeronautics would also remain in focus because the labor union has decided to go on an indefinite strike starting October 14th. to support their demand of fair and early settlement of wage revisions. And now the company said that the action is under progress to communicate the management's stand on the issue to the unions and to request them to call off the plan of indefinite strike. Lastly, a couple of stocks that would remain in focus because of September 2019 updates, production and sales update that they have given. Apollo Pipes, firstly, now they are saying that the second quarter sales volume were up 11%. NMDC says that for the September month, the production was down 30%, while the sales were down nearly 18%. Coal India has said that their production fell by nearly 23.5%, while the sales volume declined by nearly 20%. Lastly, MOIL would remain in focus because for the month of October, they have cut the prices by nearly 5% for different grades of manganese.
Thanks so much for that, Soumit. Now, if you're a tech buff and if you're looking for the next big thing, Microsoft might just have the answer. The tech giant recently unveiled 5 new Surface devices set to release this year and 2 dual-screened folding devices slated for a late 2020 release. Take a look.
Has a 360-degree hinge that gives you infinite postures. So I can go from, for example, I can go from reading a book to composing some notes, or if I add the keyboard, I can now go into a full PC mode. Our phones are not productive enough. With dual screen devices now, you can, for example, start an email and then complete it here. You can do a video call, a Teams call, and take notes. Yes, it'll make phone calls, but it's designed to help you be productive on the go when you're mobile.
Would you use a folding phone? Yeah, well, they're not calling it a phone. Would you use a folding device? Let us know in the comment section. Meanwhile, there's a lot more coming up in just a short while. This is BloombergQuint.